Some episodes ago, we started a series on understanding the trading of shares and what goes into listing a company on a stock exchange. The premise of our discussion was prompted by the Botswana Stock Exchange's CPD Mentorship Program, an initiative that is aimed at educating potential issuers on what is required to go from a private to a public company, or in other words, being a listed company on the stock exchange. We found out from those discussions just how much goes into finally being a listed entity, which for the most part is a lot of complex paperwork. As a company that has no familiarity with all the nitty-gritties of this process, employing the services of those with ample experience in the capital markets will ensure that your request or application to list will have better chances at being successful. These are professionals who include legal advisors as those who join us this evening. Rizwan Desai is the founding and managing partner at Design Law Group and has over 20 years as a legal advisor within the capital markets. Here also is Sipho Ziga, leading partner at Armstrong Attorneys with over 15 years as a legal advisor. Our first conversation is with Rizwan to find out what the experience has been like working with different category companies looking to list their entities. Rizwan, you have said that you've met and you've advised, quite a number of companies that are in various sectors of the market and the economy. And, one would wonder what has been the most important, bit for having a good legal advisory team when wishing to go public.
What I think is the most important contribution from a legal perspective is in ensuring that all the documentation and the story that documentation must tell is both technically accurate and is reliable, because at the end of the day, in a listed environment, people are going to invest on the basis of their confidence in what they see. So what is critical in terms of the role I have played as a lawyer and other lawyers who are involved in this field is to ensure that you almost are there to direct the traffic, that it complies with the relevant road laws. And in this case, the laws are those of the BSE, and also those rules and permutations that institutional investors look for. But also never forgetting that, the whole point of a listing is that the man on the street can invest his hard-earned pula, or the man or woman on the street can invest his hard-earned pula, her hard-earned pula, into a company and know that that money, subject to market conditions, of course, and you'll hear that the value for shares can go up and down. But at least at the onset, what they invest in is what they've invested in. And really that's the key role that I think lawyers play. And I found fascinating in myself in playing that role.
You've been, in the capital markets, being a legal advisor for more than 20 years. So what would you say could be the biggest takeaway that potential issuers could learn from, this journey that you've been a part of?
I think the biggest takeaway is that issuers need to, at an early stage, decide upon their full advisory team. So that's not just lawyers, but brokers, corporate advisors, auditors, and provided you have the team that works for you from day one, you will be looking towards a successful listing. That's takeaway one. Takeaway two, if I may, is that the issuer must at all times believe in his or her company, in his or her vision, and making sure that all the ground rules and the governance issues are dealt with upfront. And if those are done, then you're looking at a successful listing. If those are not done, then the market confidence may not be at optimal levels in the product that the issuer wishes to bring to market.
As a company wishing to list on a stock exchange, simply applying or putting in a request with the stock exchange does not mean that you'll be successful. There are a lot of T's that need to be crossed and a few more I's that need to be dotted. We engaged our guest, leading partner at Armstrong Attorneys, Sipho Ziga, to learn what factors determine whether or not an IPO application or request will be successful.
Once a company moves from being a unlisted company to a listed company, it then becomes subject to enhanced public scrutiny, in the sense that there are then a number of requirements that have to be met from a disclosure perspective. It's important to ensure that from an accounting perspective, everything is in order. From a corporate governance perspective, everything is in order. And from a strategic point of view, the company is able to share its strategic objectives with the public.
How do you think potential issuers can gauge whether or not they are ready to go public? What readiness assessment indicators should these companies be zooming into?
What I would always advise is that before a company considers a listing, whether in the CPD board or the main board, the first starting point should be an appropriate legal due diligence review of all its operations. Then the second issue is to actually have a financial due diligence review of its operations. Once it has met those two and the due diligence reveals that all the boxes can be ticked, then the company then can consider a listing.
In closing, Sipho, what should life after going public look like? What should be the point of focus of companies that have successfully listed?
The point of focus after listing is compliance, because you then become accountable not only to the promoters but to all the other investors. And you are then listed and subject to enhanced governance and disclosure rules. Compliance is the focus for all listed companies. Compliance with the ongoing requirements, which all other companies don't have to comply with, but listed companies have to comply with.
This program was brought to you in association with First National Bank of Botswana.
FNB, how can we help you?